The market throws us a curveball with a deeper than expected pullback. Does this mean 4440 is off the table? Find out next on Invest with Jacob. Alright guys, so yesterday the Turnaround Tuesday theme continued, with the market pulling back even further than we expected. If you note in yesterday's video, I said if we broke the 43.75 mark headed down, we were likely starting the C wave down. The market did just that, however, it did it in a corrective fashion. So does this mean 4440 is off the table? We'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so with the market moving below 43.75, we had our eyes on the start of C. However, it was unable to complete a 5-wave structure down, indicating that we had started the C wave. On top of that, when it bounced, it completed a 5-wave structure up, which tells us that we should be in rally mode again. So even though we broke through our target area, we didn't do it in an impulsive fashion. And Elliott Wave tells us that when we don't have a 5-wave structure, we are likely to bounce and make an impulsive move in the opposite direction to start a new rally. And that's just what happened. So let's jump into the chart and take a look. Okay guys, so here we are on the 1-hour futures chart, and I wanted to start zoomed out for you today so you can see the big picture on the count of where we're at right now before I zoom in and show you what we're trying to get to the next couple days. So if you remember last Monday, we crashed down from the top of wave 3 here and started our corrective movement. Remember, corrective waves are 3 waves long. They go A, as you can see down here, B, as you can see up here, and then C is not on the screen because we expect it to be around 41.65. Okay? And then each one of these waves also breaks down into 3 waves. So you can see up here from the top of 3, we had an A of bigger A down, and then a B wave bounce up, and then a C wave down to complete A. Now, the important thing to realize about corrections is that the C wave is always 5 waves, okay? And the B wave is always 3 waves. And the A wave can be either 3 or 5 waves. Most of the time it's 3 waves, but occasionally it will be 5. So as I noted, we had the A wave down, the B wave up, and then the C wave down to complete larger wave A. On the way up, we had the A wave up of B, of larger B, okay, because it's going to be an ABC move up. So we had the A wave of B up. The B was kind of a sideways WXY pattern. It's a little more complex, but just understand that that's the B wave there. So B of B. And now we're trying to complete this C wave up to complete B. If you'll remember when we crashed down here on Monday, I said that it was very likely we'd go hit 4440, and I still believe that to be the case. And I'm going to show you why as we drill in and look a little closer at the C wave. Okay guys, so here we are zoomed in on the C wave. You can see the larger B up here, and you can see the smaller AB down here from the other chart. So if we go look real quick, that little AB is this right here, and that larger B. So we're zoomed in on this wave right here so you can see it a little bit better. All right, guys, so from that B on the other chart, we count up in 1 of C. Remember, C has to be a 5-wave movement. Then we count down in 2 of C, and then we have wave 1 of 3, okay? 1 of 3, sorry, circle 3 here. 2, 3, 4, 5, okay? So this is wave 3. What we got today was wave 4, and now we're looking at making wave 5 up. Now, why do I think that this is wave 4 and not the start of C down, with this being a bounce? Well, there are a couple reasons why. Number one, if you look at the top, okay, where this circle 3 is, we only get 3 waves down. You get 1 right here, you get 2 up, and you get 3 down. Without a 5-wave movement down, this is just a corrective wave. This is an A, B, C correction. Okay, so this C wave did not start with a 5-wave impulsive movement. So that's the first thing that told me, hey, this probably isn't the start of C down. After that, we got a 5-wave movement up, and it's hard to see, we're zoomed out here. But if I zoom in, you can see this is a 5-wave move up in 1, and then pull back here in 2, and then we've started wave 1 of 3 here, pulled back in wave 2 of 3, and now in the overnights, we're starting wave 3 of 3 up. So where does all of this target? Do we still have 4440 in the game plan? Well, let's take a look. Let's take our fib-based extension tool. Let's go to the bottom of 4 here and measure to the top of 1, okay, and to the bottom of 2. Drag it across so we can see it. And we can see that the 2.0 extension, which is a very common 5-wave ending point, is 44.40 on the dot. So this lines up perfectly with our target of 44.40, which is what we're expecting this B wave to end at. So for all of those reasons, even though we broke below this support box here, we did not do it in an impulsive fashion, and that's why I believe that 44.40 is still on the table, and that's where we are headed over the next couple days. I likely believe that the Fed will ignite this movement up to 44.40 before they go ahead and crash it down either late tomorrow or starting Thursday. So that's what I'm looking for, guys. This is the setup that we have now. Again, we have 1, 2, 3, 4 down today, and now we're starting 5 up, and it looks like our fib levels line up perfectly. This is a great setup. I think that even though the market tried to throw us a curveball by breaking below the support box, it did not invalidate. As you can see here, the top of wave 1 is right here. It would invalidate if wave 4 over here dipped down below wave 1. So if we draw a line across, okay, had this come down through this line, then it would have invalidated the count because wave 4 cannot come across wave 1's top. So it looks to me like we're setting up for a very bullish move up here into the 44.40 range over the next couple days before finally starting that C wave down. This is how corrections work, guys. They're very choppy. Sometimes they're very hard to track, and that's why we don't trade them very often. But when you have a larger correction, it's good to catch the top of the B wave and get that C wave down, and that's the time we're going to short the market. It's one of the very few times. So guys, if you like the information I put out today and you want real-time market updates from me as the market is trading and all of our buy alerts and sell alerts, you need to get in my Facebook group. There's a link down in the description. You click that link, it takes you over to Facebook. Get in my Facebook group. In the announcements section, you'll find a link to Slack, which is my free chat channel. Get in there. There's a bunch of great guys in there. We have a great trading room. I give real-time market updates. I answer all of your trading questions. We would love to have you in there to make some money together. But guys, one thing you have to do to get into that Facebook group, it's very simple. You have to subscribe to my YouTube channel. So go ahead and hit that subscribe button down below. Come over to our Facebook group and get in our chat group. We would love to have you there. Okay guys, so key takeaways for today are we are looking for this to continue this move up off the lows in wave 3 of 5, headed toward our 44.40 target. As you can see, the fibs line up. It's a really good setup for us. And then once we get to there, we're looking for that pullback 1-2 setup so that we can trade 3 of C down. That is the market update for today. I will talk to you tomorrow.